according to the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel that's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I got your watch list coming in November 11, 2021, and the stock market volatility is back. Today was a crazy day. If you look at how it played out, this was actually one of the more worst CPI reactions that we've had. The only other time was September. We had another big drop, and then also May of this year, it was actually double the size of this drop. Now, what we got today was very important. There was a lot of things going on, and it really didn't hit till later. The big thing was the CPI, but now we have to talk about what you saw with the bonds, and now the market may get a little shift, and that's why I want to talk about a lot of the plays. So I do have some protection ideas. We made a lot of different plays today. We got to take some profits too, but as we set up for the end of this week and then seeing if the market gets jumpy or volatility, we are going to have a little different set of opportunities. So we got a lot to talk about. I want to go over everything that happened in the market today, what we're expecting for tomorrow and closing out the week, the plays that we made, which were a lot, and then the plays that I have for tomorrow. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes for open. It's the first link in the description and it's pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/the-stock-market. You can post the plays, see the plays, watch the watch list come to life. And yes, if you think that Rivian was just a plot for Jeff Bezos to hire his whole family, then yeah, we are the place to be. And the most important thing you need to do, post your watch below. Let us know what you're looking at. Got any plays, comments, remixes, anything. Post them below and source that info. Shout out to Chad, baby. So, right off the bat, like I said, we got this CPI report today, and it came in at 6.2% on the headline. And honestly, that was just too big for anybody to ignore. So, there was a lot of things that happened today, and I think there's a more bigger reason why we saw the moves that we did. But at the end of the day, this was a very big print. This kind of gave a lot of people that I told you so for inflation. It's still there, but you definitely have a better attitude about it than before. A lot of the market, a lot of investors, even the general public, they've all kind of prepared for inflation in a way, so it didn't shock too big. But remember, the expectation was 5.9, and that was high. You've now hit a historical level. This is the fastest rate of inflation in 31 years. So that definitely had something to do with today, and that was a big issue. But I will have to say that today was all about the bonds. So if you were watching TLT, we brought this up yesterday, and it was an opposite move. You know, you had way more activity in bonds, but now today was a bond auction, and what ended up happening is that the buyers did not show up at all. The long end of the curve shot up, and you saw this huge drop on TLT. You really haven't seen a 1-minute candle that big. Some people, I believe this is one of the biggest trailing bond auctions, or the biggest tail, aka the biggest leftovers from one of these auctions in a while. Essentially, the rate started to surge up because people did not show up to the auction. The yields went up, and we've talked about this. This has to do partly in part because of that yield curve, and even shy, this is the short end of the yield curve. Those yields have been going higher. So some people are saying that's the effect that we saw today, but in general, this also could be what tapering looks like. So we're coming off of the Fed not too long ago. This is now the first big inflation number, and now people did change their expectations after that today. After the CPI drop, the Fed expectations for rate hikes, they all shot up, and now everyone's expecting July 2022 for the first rate cut. So it's all very important, but like I'm saying, this could just be what that tapering looks like. And now as we're following that announcement a week or two ago, you may start to see a delayed reaction, or at least that is what we got today. Now, I will tell you, as we set up here, and this is what you got out of today, not everything was down. You know, this wasn't a broader market sell-off. A lot of it hit tech, and some of the mega cap tech runners after earnings, they got hit. But if anything, I'm thinking this smells like a value rotation. So if you were here at the beginning of the year, you saw something like that, especially when the yield started climbing. We may start to see that. So as we move forward this week, just pay attention to the laggers and leaders and really focus on the industries and companies that are doing good. You'll notice, even though the market may be moving and it could be a wider index move, it doesn't doesn't necessarily mean that everybody is losing. There's usually a winner in all of that. So coming into your first pretty picture here now, this one has to do with the bonds. Again, that bond auction was very historic, but now so is this rise here on the short end of the curve. So what this is showing you is the 2-year bonds, and what happened today, this is actually the largest increase since March 2020, and that itself was a historical move leading into it. So I'm showing you this to highlight what you saw with bonds over the last 2 days, but especially this move today. This was a big factor, and if this does keep continuing, you are definitely going to see effects, and it has a lot of implications there, and a lot of what would play out we actually got to see at the beginning of the year. That's why I'm saying rotation, tech stocks, all of that. So all in all, this just highlights the importance of the bond moves that we've gotten the last few days. So watch out for that. But then coming into the rest of the week, this was a statement I read today and I thought it was good, but essentially the market and Fed will remain calm as long as the bonds remain calm. So if you look at TLT over the last few months or even weeks, there's been some moves, but it has stayed within a very defined range. So as long as the bonds stay chill over the next few days or even the next few weeks, that is really going to decide, okay, maybe we might start to reverse this little earnings trend that we got here. But essentially, bonds will be the next big key, I think, until we get some of the Christmas headlines or any other bigger news like appointees, politics, or anything like that comes out. So coming into tomorrow now, this is why it's so important, because the bond market is actually going to be closed. So you have Veterans Day, and now that's why I'm saying tomorrow will be a very interesting day, because we're either going to see a little bit more volatility or it might cool down, but then whatever happens on Friday with the bonds, that may start to kick it back up. So tomorrow will act as a weird data set that will give us confirmation, but now a lot of eyeballs are going to be on what happens next and if we continue some of the sell-off that we saw here today. But overall, you still got earnings. Most of them have been great. We can't knock that. The inflation report is big. We've usually responded really big as far as CPI is concerned, so this move is kind of justified. But moving forward, getting to the end of the year, it's going to just be all about bonds and then finishing up these earnings, but it's pretty straightforward, so I hope you're ready. But coming into the company news and events now, you had a lot of earnings after hours, and this is even going to set up a lot of plays for tomorrow. But Affirm, they beat on all metrics, so they even guided up, and they had a partnership with Amazon. The stock was down like 15% throughout the day. They jumped, and now they're even up, I think, an additional like 10 or 15%, so big move. This was a hype play. We closed out of our 3,000% option not too long ago. The options are still expensive, but they overall beat. They got the hype. This is going to be key tomorrow. Then Disney, they missed on everything. They missed on subscribers, EPS, revenue, all of that. It was not good, but they fell pretty much in line with what the option market was pricing, so fairly neutral. We'll see how that plays tomorrow. Then Open Door, that one surprised us, and they surprised a lot of people, but they did good simply because they are not Zillow, and they just didn't do as bad as Zillow. They actually own 17,000 homes. That's pretty crazy, but they had a nice 25% pop. And then Beyond, they missed and even guided lower, and they blamed the Delta variant for hampering their product testing. So that one was interesting. Stock got kind of crushed. We'll see where it ends up, because they didn't really have a good earnings, I believe, last quarter either. So we'll see what happens. But those were the main earnings. And then coming into politics, this was the biggest piece of news, and we'll see. And keep your eye out for energy. This one's actually huge, but it's crazy. But Biden is now facing pleas for a oil export ban to curb oil prices, aka to ban the United States from exporting oil. So we got a long-standing history, or we used to, of this, but we ended this a while ago, and it allowed oil to flourish and for us to do a lot. But this is a very, very big piece of news, and really it could upend all of the energy markets. This would have disastrous effects both domestically and abroad, and a lot of people are talking about this now because they're saying with OPEC rejecting the supply increases and all of that, they're saying this is a tool they could use, and that's exactly what they said. They literally said, this is a tool we have not used yet, but it's still a tool. So it's most likely jawboning and trying to scare some things, but this came up in the discussion today. Very big headline, and we've been watching oil and energy lately, so definitely keep your eyes out for this one. But that was key. And then Evergrande, a lot of people talked about this today, but this was the official headline that they came out and they paid the delayed interest payments that they owed. So this means that they're set to avert a default again, but there was this lawsuit PR in the morning, or it's by a law firm, saying that they filed something and that they have to default, or that they already did. So this created a little bit of confusion, and then this news came out afterwards as a more official release. So we'll see how it plays out, but it seems like nothing has happened just yet. If anything, I'm leaning more towards a positive Evergrande outcome, or at least them paying it, just given some of the headlines we got today, and even now that Biden and Xi Jinping meeting next week, but we will see. But that was a big key piece of news. And then Rivian, we watched the IPO. They still got, they only did 100 million shares. They still got 50 million shares to sell, but given the price they came out at is about $88 billion, and they gained from the IPO, so they were only going to come out around $75. They closed above that, but the stock opened at 105, went as high as 115, and then I believe it closed down around 100, so below where it hit the secondary market. But a lot of eyes on it. We're still going to be watching that one tomorrow. A very historic day, and here's a pretty picture to give you an idea of what's going on. But looking at where Rivian stands, they are bigger than Ford, Great Wall, Lucid, and NIO, and then they are just right below General Motors. So that one was interesting. Like I said, we're going to keep watching it, but shout out to all the Rivian holders if you got it in on IPO. But coming back to China now, this was the final piece of news. This is what I'm saying. Some stuff could be a little bit better there, but the government announced today that they're planning to ease restrictions on some of the property and the developers there. So that was positive news. Again, you got that meeting with Xi Jinping next week. We'll see how things play out. Some of the earnings have been decent so far, so we will watch how that plays out, but it doesn't look like it's escalating as it was a couple of months ago, but we will see what happens. But very straightforward, not too many headlines. It's all about the earnings, all about this CPI and now inflation, and now you may even hear about tapering talks, but we got to see how the end of the week ends, so I hope you're ready. But that is pretty much it, so let us get into the plays. So right off the bat, I got 3 different stocks, a little bit more that I'm looking at. I'm going to go over these quickly. These are going to be the ones I'm watching for tomorrow. I have plays on about 2 of them. One I already sold out of Firm, but I want to go over all of the plays that I made today, because then you'll be able to see some of the strategies that we have at work. But the first play that's going to be a Firm. They had good earnings, good guidance. A lot of things are going in their favor, but on top of it, they already have a lot of hype. And now this is what's going to make it a little bit tricky. Again, this is a post-earnings continuation. A lot of the plays that we've made this week, even the video yesterday, I wanted to highlight that with Roblox. We've been hitting all of these. We even played the DoorDash today, and you'll see what we did with that. But essentially, this is a post-earnings run-up, but now a lot of those options are still expensive. That's what's going to make it a little tricky. So definitely going to watch this one for tomorrow. Be careful on the premiums. I mean, be there on stream. I'm definitely going to be looking at them. It's probably going to be one you could follow along with all day. I think there's going to be multiple opportunities, so we're going to watch that. Affirm, I don't have a play, so that one's going to be exciting. But then the next play, Open, I really like this one, and we already have a play, and we played it earlier last week off of the bounce that it had. It had a not Zillow bounce. That's what I'm calling it. Pretty much people realize Open Door wasn't Zillow. Again, they do way more homes. Zillow's talking about a couple thousand homes or 3,000 homes in a quarter. Open Door announced they have like 17,000, and they've doubled even the homes that they had from quarter over quarter, but they are not doing bad. Again, Zillow was kind of more unique to just them, but this is what I was talking about with the not Zillow bounce. This was that Zillow news they dropped, and then they shot up like 20% like 2 days later as people said, oh, well, maybe they're going to be better. And I said, okay, I think that could be a decent play. I wanted to get the earnings run up leading into today, but then it just sold off. So I'm down 60%, and the actual plays that we're holding, I think it's the December 35s, I want to say. Yeah, December 35s. I only have 3 of them. I bought them at $1 a pop, so I was down 200 bucks coming into these. So gonna play these tomorrow. If it does continue, I think it could be good, but I do think it has 2 things going for it tomorrow, and that's essentially, one, the good earnings, and maybe we'll get some upgrades, and then the second fact, people are gonna like that it's not Zillow, and now it gives a little bit of a winner-loser effect where you might want to put money there if you had it in Zillow. So gonna be watching them. That is the second play. And then finally, this is me putting my money where my mouth is, and I got a little hint of it today, but I did keep it small. That's why I really want to see how the bond market plays tomorrow and everything else, but I went for some value plays. So Johnson & Johnson, Coca-Cola, and Cardinal Health, I made plays on all 3 of them, but the idea here is that all of these were green. These are some of the value plays, and it shows today wasn't really that bad of a sell-off. All of these names ended green, and you really saw certain value names hold. So depending on what bonds do, and I think the close day tomorrow will give us some confirmation. I think we'll have time to really confirm this trade, so I think I'm a little early. That's why I kept the play small, but I don't think it would be bad to speculate on it, so that's what I'm going to be focusing on. But coming into tomorrow, I will be looking at all of the value plays. So to see the ones that I played and how we played it, we did those three, but it started a little bit later in the day here. I made a Johnson & Johnson. There was news that a judge was suspending any future lawsuits for a period of time because the baby powder stuff and their little bankruptcy sketchy stuff that they did. But this stock pop, we got the news very early, so I made two different orders. I bought 20 of the November 19th shorter term. They were pretty cheap there. This stock was already up. It had a news pop, and this was while the market was going down, so that's why I liked that. I said, okay, I kind of saw a little bit of it. They were about 11 to 12 cents each, so I bought 20 of them, about $200, and then real quick, within 2 minutes, I mean, we got it that early. I was able to sell some out at 18. I sold 10, got a decent majority back, almost like 80%, a little bit less, and now I'm holding the rest for free. This one, gonna want to flip it and see if we could find another play with the remaining 10, but given that I'm looking for some of the value move, I decided to still hold 10 of them. But that was the first one. And then Cardinal Health, they had earnings 2 days ago, and they even dropped off of it, and you'll see, and if you come to the chart, you'll see what I'm talking about here. Had their earnings just yesterday, had a little drop. They even got downgraded, but they had this pop, and like I'm saying, today, market was really not doing good. They were up 2%. I said, okay, could be a decent one, and if you do look at them, they are a real value play, and this is yielding 4%. That's what I'm saying. If rates are going to be moving, inflation, all of that, a solid dividend stock will be good, and even though they got downgraded, all of the price targets are still higher from here, so there was a value rotation, and you can see how it's kind of performed seasonally at different times, or at least 12 months ago. I thought it would be decent, so I grabbed a small play there, but even on this one, I went with 5 at 50 bucks a pop, spent about $250. The J&J spent $200, got most of them back for free already, so these are a lot smaller, especially when you compare with some of the other plays we did. And then finally, right before close, I wanted to get a little bit more of the value stuff. Again, I saw that it was holding with some of the moves towards the end of the day, so I grabbed the Coca-Cola January 60s for 30 cents. I got 10 of them, $300. So all three of these plays are probably going to add up to some of the other ones I made. You'll see, but I think it's good to spread out, and I want to see if we do get a move there. But value is definitely going to be one I'm going to be watching, especially if these trends continue. But those are going to be the main plays. Let's hop right back to the TD Ameritrade. As far as everything else, we made a lot of trades today, and I'm only really holding the value plays. Those are the ones I kept open. The rest is going to be all about monitoring and even playing some of the ones we've been following. But I started the day with the DoorDash. We talked about this one yesterday. It was going down in the morning, and these were pretty cheap. I grabbed the December 270s for $1.94, kept it a little smaller, 400 bucks for 2 of them. It shot up 100% at one point, but the spreads were really wonky. I was even up 50%, but then I couldn't get filled, and I was like, all right, I don't know if it's gonna really hold. The volume wasn't as good. You still did see the continuation, so sold out at 230, got a nice little 20-30% there, but it should have been a lot more, but not too bad. Got to take a win, and then within a couple minutes of the market opening, Roblox was dropping, and I decided to get put. So if you remember, we had that big position. We made like $30,000, 25,000 bucks in a day, 30,000 total on the Roblos. We got those shares there. I don't know if you can see it there, but it did drop, and I wish it stayed higher. It already gapped down like 5-6%, and I did expect a little bit of a cool down, but that was big. But my plan was kind of to box it in. I wanted to use my big share position and now even allow me where all I got is unrealized gains. I could find some good trades. We could protect the shares, get some downside, and play a little bit of the cool off. So I tried it. I grabbed January 85 puts for $385. I wanted a little bit closer to the money, but I missed one of the jumps there, and the premiums went crazy. But we held those pretty much till almost the end of the day, or I guess till like 10:59. That was like the first bottom that it had, and then it bounced, and then it tested one more low, but sold out at $475, took $1,000 realized or $900 realized profit on it, but that was a day trade, and depending on how Robo plays out, that's what I'm going to be looking for. I'm waiting for the call premium to decay because it's still juiced up. The Novembers went down, and this is what I'm saying with one of the strategies here. I'm waiting for the calls like you saw with the Airbnb. Remember, we did that yesterday, and take a look. Those plays closed 30%, but even after all of what we saw today, I'm only down 2% on that Airbnb play, so I don't know if you see it because of this here. That makes it a lot better. But But this is a big deal because it's showing you, how the contract prices are moving. And if you do get a good price, I mean, it could go a long way and it'll allow you to ride it out. So I want more Roblox calls. I'm going to use some of the puts to play it if it does get volatile. That's what I want to take advantage of. But then once the calls do get cheaper, we're going to start stacking back up on those, even as well as Airbnb too. I'm waiting for that, but I made that play. Then, if you guys remember the Amazon play, we had that put there. It was against us. I was down 40% on this December 31.55 put. It ran against us for a few days, so I told you guys my plan with it. I mean, we talked about it a lot. We essentially said if Amazon gets to like 3,600, I said that's when I'll probably look to average down. So it was right around there, and it started to come down. I hesitated a little bit, but I said, all right, it might be time. The other contracts started to decay. So right before we had the sell-off there at 9:30, I grabbed an Amazon January 31.85. I went with one with more time and closer to the money. I spent $3,700 for it, and we got that again at a really, really good time. Literally 9:30 was right there, so a little bit below the target I wanted, but the premiums were actually decent, and I did end up flipping out of it, and you'll see why. Pretty much I ended up selling for a quick $550 profit. I could have made like another 1,000 or two. We had a really, really good entry on it, but my logic was I was down on this original play about like $400 or $500 at the time. I was like, all right, let me realize this 550, and then if it does keep going down, I could ride this one back to positive, keep the original play, and then just go from there. So I did it, but I would have made more money on the January because of the entry and closer to the money, but still riding out this one. We were up 10% on it, but I didn't take it. I wanted to hold a little bit just in case, and now the contract is not too bad in general, so going to be riding that one out. But that was the next play. Day trade took the profits, closed the Roblox. Then we did the flip on Johnson & Johnson, held those free. Then I bought back that Roblox covered call thing. I took a $400 loss. That was the mistake one. I figured I could just walk away with that for $400. Not too bad. Just get over it. Then I did make another day trade on Amazon. I wanted to call the bottom there. I was looking at it. So like at 11:46 or so, I think it was like right here. Yeah, like really at that bottom there, it had a little bounce, and I thought it would bounce a little bit more, but it didn't, and I didn't see it going anymore. So I got a little $90 trade, $27.65 to $28.50, a small one, and then I went for the value plays. But the thing with the Amazon one, if I went for something like Tesla, I was just really, really focused there on Amazon. But I talked about this today because someone asked if you should buy Tesla here. I said, if you got it at that same time when we were timing the other ones, these are some of those moments where just like all the premiums go down. You could have really bought anything and got it. The Amazon didn't end up continuing, but if you did get something, that would have been a killer entry. So overall, those are all the plays. Oh, I almost forgot to. I did sell my 300 shares of AMC at $38.50. A lot of people got mad at it. That was a 1,000% share play. We bought it last August. I just wanted to get rid of it. I needed the money. I needed it for the cash balance there. And the CEO said he's going to be selling some shares as well too. But overall, I wanted it. I thought it was a nice gain to take. We even got 3 or 4,000 from covered calls already. So not too bad. But to even highlight what you saw here today, pretty much every single trade I made, I ended up closing except for the free J&Js and then the value plays. So a lot of trades, but a lot of it ended up being closed, and we're still just holding the same stuff. I still got that Amazon. We got the J&Js. We closed out of the dash. We're going to see what happens with the open door tomorrow. And then some of the other plays that are down like Space, Bot, Clorox, they're pretty much still clapped. Some came up a little bit, but you could see how we're playing out. So there's definitely some losers there, but for the most part, we've been making a consistent habit to take those profits. So those are all the main plays. As far as everything else, pretty much everything that we listed. Watch Uber. They got a lawsuit from the DOJ about people with disabilities and the wait times and something like that. And then there was something else. They raised prices in London, but they ended up selling off. Watch Disney for the continuation, and even Dash too. Dash may be able to surprise. Again, it wasn't too bad. It just didn't have the gas, but watch out for them. Then Rivian, we're going to see it tomorrow. They still have a lot more shares to give out, but we're going to watch that. Just keep in mind, 50 million more shares. That is a number that you want to look for on volume tomorrow. So call it out when you see it. And then Roblox, I'm probably going to play this again, both downside and upside. I do like it more for the upside, but I do think you got a way bigger sell-off here than Airbnb, and I still really like the Airbnbs, but Airbnb is a lot more solid, so I think we're going to get more volatility in there, so watch out for them. Then Wish, they beat on earnings. We still have our old IPO shares, but they're pretty class. Oh, they ended up coming down, so watch out for that one, though. That one's been a hype one. And then Open Door, like we said. And finally, I mean, TLT and the dollar, it's very simple. TLT should be down. I don't know why it's fat fingering, but if you start seeing big candles to the downside, it may low-key start hinting taper tantrum just a week or two delayed. And then the dollar, it broke out and hit that short-term strength. They're watching those opposite moves like we talked about. So keep your eye out for this, because then this could also highlight some of the tightening liquidity, if anything. But like we said, if the bond market could stay calm, and as long as it doesn't set a new range top or bottom, things should be chill for the most part. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure you're healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shine. I need you to remember, it's not about the weight. It's how long you hold it, baby. But Nicole loves you. I love you. I'm gonna see you in the morning. Let's go.